Hi guys, welcome to the video on the 6-column worksheet. The 6-column worksheet that we are looking at today is based on the company that we have been working with so far this semester, Roadrunner Delivery Company. And some of this 6-column worksheet, as you see it right now, looks very familiar. What you'll see over here is the trial balance that you guys just completed for Roadrunner. And this 6-column worksheet is kind of the basis or the start of developing the financial statements for the company. As we know, accounting is used both internally by management and externally by investors and banks and so forth. So building these financial statements is going to kind of give us the reports that we need to share with people outside of the company. So this 6-column worksheet is divided into 5 sections. The first section that we see here is the 3-column heading, and most financial statements will have this. It says the company name, what we are actually looking at, which is our worksheet, our 6-column worksheet, and then the accounting period that we're looking at. So in this example, we are looking at the accounting period of the month ending October 31st, 2013. The next section that we will go to, the second section, is our account names and numbers. These are all the accounts that we have been working with thus far for Roadrunner Delivery Company. Moving on to the third section, you have your trial balance. Now this trial balance looks very similar to what we just did. Now the trial balance that we just finished wasn't part of a 6-column worksheet, but it's the exact same layout, exact same configuration. Anything with any account that has a normal debit balance is in the debit column. Any account that has a normal credit balance is in the credit column. Now we're working in double entry accounting. So double entry accounting tells us that all of our debits must equal our credits, and that's what this trial balance tells us, that all of our debits here equal our credits, which is great. That means we have no errors. Moving on to the fourth section, we've got our income statement. This income statement is going to tell us if we had income or if we experienced a loss, which would not be that great for a company. And then the last section is our balance sheet, okay? And our balance sheet is going to include all of our permanent accounts, our assets, our liabilities, and our owner's equity. Now this 6-column worksheet, it looks fairly complex. There's a lot of columns going on, but I'll tell you what, it's not really that complex. And here's why. Everything on the income statement is going to be revenue and expense, our temporary accounts. Everything on the balance sheet is going to include our permanent accounts. So literally, we can just do a copy and paste of our permanent accounts, our assets, liabilities, and owner's equity, 1, 2, and 300 level accounts. We will copy those, and we are going to paste these into the balance sheet. Okay. Now you'll notice that we did include our withdrawals. That's considered an owner's equity account, but it has a normal debit balance. So we're going to make sure that that remains in the debit column. And then over here on the income statement, we are going to copy and paste our temporary accounts or our revenue and our expenses. Now our goal, just like when we did the trial balance by itself, our goal is to have each of these sections balanced. So you'll notice that we got our trial balance numbers to balance. Our debits equal our credits. We're going to do the same thing going across for each of these columns. So let's again use our formulas. So I'm going to start my formula, equal sign, sum, open my parentheses, and I am going to grab every single cell in this column. Now you'll notice we don't have any values up here, but I think it's good practice, and I'll show you why, to include all of those. So we've got a total of $1,500. Now we can do the same formula, equal sign, sum, open our parentheses, drag everything down. Okay, so we can do this formula for each one of the columns that we have. Now you'll notice as I do this that the values in my income statement do not match, right? They are not equal. That's okay. I'm going to tell you why in just a second. Right now we've got a debit of $1,500 and a credit of $2,650. Definitely not equal to each other. Remember I mentioned that the goal of the income statement is to determine whether or not we have a net income or net loss. What we've got over here in this shell of our 6-column worksheet is net income. Okay, so as we scroll over, we are going to find our net income value, and we're going to place it in this cell right here in J18. Now, in order to find our net income, we're going to use the formula revenue minus expenses. Okay, and rather than using a calculator outside of Excel or Google spreadsheets, we're going to continue to use the formulas that are available for us in the income statement. So I'm going to do equal sign, and I'm going to take my revenue value minus my expense value. And that is going to give us $1,115. That value, since it's a positive value, means that we have that much in net income. Now, if we had greater expenses than our revenue, we would experience a net loss, which would mean that the company did not earn any money. But we're happy to report that right here we have a positive value and we have net income. Okay. Now, as I mentioned, we want to make sure that each of our debit and credit columns are going to be equal to each other. So right now, we can't tell if our income statement is balanced. Okay. So I'm just going to do a simple formula, equals sum, and I'm going to use the two cells above. And you'll notice that we have $2,650, which equals our credit amount. So I'm just going to move this value down below. So this is exactly what we want to see. Our debits equal our credits. Okay? Now, each of these values in our income statement, these are our temporary accounts. So these temporary accounts at the end of an accounting period need to be zeroed out, right? Because they don't carry forward like our assets do or our liabilities do, any of our permanent accounts do. So what we're going to do is we are going to transfer our net income to our owner's equity account. Okay? So when we increase our owner's equity, we increase our owner's equity on the credit side. So we're going to take this value of net income, $1,150, and we are going to increase or place it in the credit column of our balance sheet. So I'm just going to do equal sign and click the net income value. Okay? So I am adding that. I am increasing it using our credit account. Okay? Now, if I do that same simple sum formula, you'll notice that our $38,275 value that we now have in our credit column is equal to that of what we have in the debit column. So I'm just again going to go ahead and bring this number down. And now what you see is that we have the balance sheet where our debits and credits equal each other, the income statement where our debits and credits equal each other, and the trial balance where the debits and credits equal each other. This value of net income, I'm going to go ahead and highlight it for us. This is the value, this is the value of net income, the total income that we have from our temporary accounts that has to, at the end of an accounting period, get transferred over to our owner's equity. Now, I'm going to click over to this other tab here. The reason that we put it in that credit column is because we are increasing our capital. So when our revenue is greater than our expenses and we experience that net income, that is going to boost our capital, right? We have more value in our company. If the opposite was true, if our revenue was less than our expenses, we would experience a net loss, which would mean that the capital of our company was decreasing. If that was the case, if we had to decrease our capital, we would have to put this value in the debit column because debits on the left, that's how we decrease our capital account. But in this example, we experienced net income, so we are adding it to our balance sheet on the credit column so that we can increase or boost our capital. Okay, so this is, in general, how we complete the 6-column worksheet. The goal of this 6-column worksheet is that we see each of the values in the debit and the credit columns equal each other. So the income statement debit and credit equal each other. The balance sheet debit and credit equal each other. That's how we know in double entry accounting that we have done our job and done it correctly. If we notice that these didn't match up, we would need to kind of work our way backwards. We would have to double check our trial balance numbers. If we noticed these two didn't work out, we'd have to go back to our ledger. It's very easy to make errors, but we would need to make sure that that didn't happen before we moved forward. Okay? So now what I want you to do, having just completed the mini practice set trial balance for your company Canyon.com, I want you to use the shell that I have for you on the Bellwork and Agenda page in the blog, and I want you to complete the 6-column worksheet using the numbers that you have for your trial balance. Okay? So work through that 6-column worksheet. If you need to rewind this video and take a look at some of the things that we discussed, please do that. Thanks, guys. We'll see you later.